James Wellstead, Corporate Affairs and Investor Relations of Sibanye-Stillwater. Nice to see you again. Thank you for coming to Arlington's offices here. I want to thank our co-hosts, moneynetwork.co.uk and Cat Calls, which is also us. Thanks for coming to London. Why are you here?
We're actually here for a conference. Investec are hosting a South African CEO conference, which is an annual event. Unfortunately timed with the rugby test as well, so we'll be at the rugby test on the weekend as well.
Right. It's an SA England match on the weekend,
That's
is
right.
it? Yeah.
Correct.
So who's going to win that one?
Yeah, I think we all know.
Yes. Well, given Australia beat, yeah.
No, listen, it's going to be a contest, but yeah, we're looking forward to it. I think we're cautiously optimistic.
So James, Sibanye-Stillwater, Sibanye it was called then. I recall when it got listed, it was a gold dividend play. Had some old Anglo Goldfields gold assets, 2013, and then it became PGMs, buying PGM assets, 2016, and then the big acquisition was Stillwater in North America, $2 billion. I think that was 2017.
Yeah.
And then we saw you, or Neil, pivot M&A-wise into battery metals. How do we think of Sibanye-Stillwater today? How do you define it, and where is it going?
Yeah, so, I mean, let me take you through the journey. When we listed, it was Goldfields that spun out 3 South African deep-level mature mines. We turned those around, restructured significantly, and turned them around. So I think when we took those over, they had about 8.5 years life. We've been mining there now for 11 years, and we've still got about 10 years life at those operations. So it was quite a substantial turnaround, and it put us in a very strong position at the time. I mean, a lot of the gold companies were restructuring, cutting costs, reducing capital, and we had a very strong balance sheet. The problem was that our rating, because we were South African deep-level gold mined at the time of the labour relations, there were a lot of wildcat strikes in South Africa around Marikana, etc. So we were trading quite a big discount to fair value, and we struggled to really make headway trying to build our gold operations. So we looked for other opportunities to try and sustain the business. I mean, we still had finite life at those gold mines, and that was where we identified the opportunity in the PGMs. And, in 4 transactions between 2016 and 2019, we effectively became one of the biggest producers in the world, PGM producers, including the Stillwater acquisition, which, as you said, was our first step offshore. And we realized that we did need to diversify the business away from South Africa. We still predominantly South African, or our revenue and profit comes from South Africa, but we have started to obviously diversify ourselves into other commodities and offshore. While we were in that process, though, with the PGM operations and trying to understand the market a bit better, getting involved in the market, we saw that obviously it was inevitable that battery electric vehicles were going to become a bigger part of the future auto sector, global auto sector. So we started to look at that for opportunities, trying to understand the opportunities in that sector. We actually bought a research firm called SFA Oxford in 2019. Yeah, and they did quite a lot of work on the battery chemistry, trying to understand mobility, what were the key metals that were going to be critical for evolution of the batteries, etc. And in 2021, that was when we made our first move into the battery metals. And we acquired Keliber in Finland, which is a lithium project. We've got a right to another lithium project in Nevada called Rhyolite Ridge. And then we also bought a nickel facility in France, which we are looking at converting into a precursor cathode active material plant that will supply the French auto sector as well. So we've moved into green metals effectively, and we see PGMs as green metals, so we think they're complementary. PGMs obviously used at the moment to try and catalyze noxious fumes from internal combustion engines into more benign gases, and then in future in the hydrogen economy, fuel cells and electrolyzers, etc. They'll play a key role. So we see that complementary nature, but we've also identified, I think strategically, certain trends globally that have really informed our strategy. And one of those is climate change, and we want to be involved in really trying to be a solution to climate change through the metals we produce, but also through other actions that we've taken. We've also expanded into recycling. So we've got one of the biggest PGM recycling businesses in the US at our Columbus PGM facility, metallurgical facility. And we've just bought another PGM recycling business called rhodium, which recycles e-waste and produces a lot of gold, silver, PGMs, and other base metals. So we're building that business, we're establishing that business. And then the other part of our business is in tailings reprocessing, where we own a 50% stake in DRD Gold, which is one of the biggest tailings reprocessors in the world for gold in South Africa. And then we bought a company called New Century in Australia, which processes zinc tailings at the moment. So what we're trying to develop is really, from a resource stewardship perspective, is green metals as a focus at the moment for growth, recycling, because we think that secondary supply of metals is going to become a bigger part of the global metal supply, and then also through reprocessing of tailings facilities.
Right. So if I think about, you started off as an upstream business with gold and PGMs, and then you've gone downstream really with the lithium hydroxide plant, Keliber in Finland, and the recycling business. Is there an intention to go further downstream, or have you got enough assets in general, and you're a miner or a metal producer?
No, we will be going further downstream. So even in South Africa with Marikana, and we bought Lonmin, so we already had the processing, smelting all the way to refined metal. I was mentioning earlier, on the chrome side, we're one of the biggest chrome producers in the world as a byproduct from those operations. But we are now, obviously, with the Keliber is going to be one of the first fully integrated lithium hydroxide producers in Europe. And we're looking at similar opportunities in Nevada. But then, obviously moving into the recycling side, and we're looking at energy solutions as well as part of the evolution of the business. So
is there an intention to potentially go downstream in Nevada, as you are in Finland, to producing hydroxide?
So it was one of the options. I think at the moment they're looking at, so we've only got an option to buy into the Rhyolite Ridge project, right, which we haven't exercised yet. They've just got the record of decision for that project. So we will make a call as soon as we've got the feasibility study delivered, and then our board will make a call whether we participate in that project. But there is the opportunity to move that further down to lithium hydroxide production as well.
Could the price change? Because if I recall, it was about $500 million or something was the right to buy 50% of the project.
Yes. So $490 million, we can buy a 50% stake in that project. We're waiting, obviously, for the feasibility study. What might change is the capex. But we've already secured, or the project has already secured, conditional financing from the Department of Energy in the US of $700 million. So it should be largely funded.
So you're going to stick with it? You're going to price to be agreed, maybe, but
yeah. So we'll wait for that feasibility study, and the board will make the decision. Obviously, the lithium market at the moment is oversupplied, but how we've, through the work that we did with SFA, Oxford, etc., is we believe that there will be deficits, even with more moderate BEV growth into the global auto sector. We still see that ultimately, unless you get all of the current projects that are developed on time, into production, there's going to be deficit markets probably from 2027 onwards.
But the current Nevada project, Rhyolite Ridge, is just a mine. It's not actually going to hydroxide. Is that right?
Yeah, so that's going to be producing carbonate, basically.
Okay. Okay. So if I think about the Sibanye-Stillwater acquisition, 2017, correct me if I'm wrong, James, a couple of $2 billion. In a way, you bet the company on the palladium price and got it exactly right. And that then became the engine room to diversify and go downstream and buy the battery metals. What is the M&A strategy now? Is there still things to do?
So we actually didn't bet on. I mean, the palladium price was extremely, it was timed well. But what we looked at was the fundamentals of the PGM sector at the time, and palladium had been in deficit for a number of years. Now, what had happened was that after the global financial crisis, so pre-global financial crisis, the South African producers had all started to expand their capacity in anticipation of ongoing demand for these metals as emissions standards tightened up, etc. Global financial crisis, demand collapsed, prices collapsed, but these companies were still producing growing supply into that low demand environment, which created this overhang of metal and inventory in the market. And it was only really in 2015 what was a catalyst to that change was the Dieselgate scandal, the VW, where they were basically cheating in emissions testing in the labs. And then that caused a backlash from regulatory and society away from diesel vehicles back to gasoline vehicles, which use palladium in the autocat primarily. And that created that additional demand for palladium, which pushed the price. Now, we didn't anticipate that, but what we had seen was that there were ongoing deficits in the metal, which is the current situation in the market at the moment. But these above ground stocks were really capping the price. But it's only a matter of time before, ultimately you're going to draw down on those inventories and you're going to get to that equilibrium point when the price will respond. And we believe that we're going to get to that point again in the PGMs fairly soon. So we positioned ourselves there. First of all, it was because Stillwater is one of the highest grade projects in the world, in a very favorable jurisdiction. And obviously there was a growth potential with Blitz, where they were going to be increasing production by about 50%. Now, ultimately, we've had a number of operational challenges which have resulted in costs being higher than what we anticipated. And then with the prices pulling back recently, we've actually now had to restructure that business, and we're currently in a restructuring phase where we're going to reduce production by about 200,000 ounces by the end of this year.
That really called the bottom of the palladium market, didn't it? You think you cut that production in half and the palladium price seemed to respond?
Yeah, listen, I'm not sure if we're at the bottom, but certainly we feel like we're at the bottom, and we believe that there is still upside. It's a very volatile market, though. You would have noted that the prices have come back since the US elections as well, along with a lot of other precious metal prices. And I think there's a lot of volatility, a lot of uncertainty in the market still. But if you look at the fundamentals, the basic supply and demand fundamentals, we still believe that there's upside. But that's not really driven by that. What it's driven by is the operating circumstances at those operations, and we do need to restructure. We need to invest again in ore reserve development to improve the flexibility and to ensure that they're sustainable over the long term.
Of Stillwater or the South African operations?
The Stillwater operations, yeah. The South African operations have still got quite a long life, 15 to 20 years, and quite a lot of potential for growth under the right circumstances.
You mentioned elections, James, and does it matter that Trump is incoming president versus Biden IRA, given that you've got a strategic asset in the United States? Trump wants to make America great again. How strategic is Stillwater, and what might change with Trump coming into power?
So we believe Stillwater's strategic not only to us but to the US. I mean, it's the only of any size, only producer of PGMs in the US. As you know, I mean, the Trump administration is less focused on climate change and on promoting renewables, etc. But what we have noticed and what we think is unlikely to change, and it's also part of those trends I was speaking about, how we positioned our strategy and ourselves globally, is that there's going to be increasing multipolarity in terms of the global trade model is now breaking up. Regions are trying to develop their own local supply chains. So the IRA is one of those legislations, the DOE loan that we received at Rhyolite Ridge, all indications of the US trying to secure local supply of these metals and not being reliant on other countries, especially Eastern countries, China and Russia. And we don't think that's going to change. I mean, there might be some variations, but we still think that that's still going to be a key imperative for the US, is to try and secure those supply chains. And we're well positioned, obviously, to benefit from that.
And what about Russia's role, given that they're the dominant producer, I think, of palladium? I read that that Putin said that he might divert some palladium into the sovereign wealth fund. What influence will Russia play on the palladium market in the coming years?
So it's quite critical. Obviously, 70% of PGM supply comes from South Africa, then Russia, and then US and Zimbabwe are the other major producers. There's not much else coming from anywhere else. So Russia supplies about 40% of global palladium. Obviously, with the conflict, and there haven't been any sanctions against Russian. They've been in London, the LBMA, etc., but that's more refined, bar, etc. But on sponge, which is used in industrial processes, there hasn't really been any sanctions on it. And more recently, the US, and that was also what supported the PGM or palladium price recovery recently, was that there was talk, first of all, after we announced our restructuring, two of the governors or the senators in Montana called for restrictions against Russian supply because of concerns of continuing imports of Russian metal were posing a risk to local supply. And then more recently at a G7 meeting, the US actually suggested to the other G7 countries that they impose sanctions on Russian supply. So we'll still have to see what comes from that. We're not relying on it. We'll continue with our restructuring in order to ensure that the operations are sustainable. But that is potentially going to be some upside and some benefit for us in the US.
Makes sense, yeah. That makes sense, the polarity, as you said, of supply chains becoming more regional. And talking of M&A, James, you had a crack at a Brazilian nickel asset. I believe that's in the United Kingdom High Court. How does that end?
So we were it was part of the 2021 acquisitions that we made. We had that, there were 5 in the battery metal space, and that was part of that strategy. We made an offer for Appian's, the Santa Rita nickel mine, and then the Soroti copper mine in Brazil. In November of that year, there was an event, a pit wall collapse in the at the Santa Rita mine, and after a couple of months of reviewing it and trying to understand the impact, we from our perspective, we made a call that it was a material adverse event, and we terminated the transaction. So recently we had the court case, I think it was in June, July this year, a 5-week court case where the judge ruled that it wasn't actually a material adverse event. And the next step will be to go to the quantum trial, where they will make a submission or claim losses, and damages will be awarded depending on the outcome of that trial. So from our perspective, we'll be defending that our position. We believe that they don't qualify for damages because subsequent to the termination of that transaction, they had a number of offers on the table for those assets at similar kind of levels to what we made, over $1 billion. And they haven't concluded any of those transactions. So we will be exploring exactly and interrogating why those transactions didn't go through, because there is a requirement for the claimants to try and reduce any potential losses that they might suffer before going into these kind of claims.
So what are the range of outcomes, and when do we conclude that matter?
So again, it's not clear exactly what exactly the possible damages could be. They recently submitted a $522 million claim. They said that was their assessment of what the losses they have been suffered since the termination. But again, from our perspective and from the advice that we've had, it's going to be minimal.
Okay, good. So thinking about M&A, are we going to see, we'll talk about your balance sheet if we can in a minute. Do you think we'll see any more M&A, and if so, what metals, what sectors?
Yeah. So at the moment, our focus is obviously not on M&A. The price environment's it's changed substantially since 2022. PGM, at our South African PGM operations, we were receiving basket prices of around 60,000 Rand per ounce, per 4E ounce, and now we're down at about 23,000. So it's been a significant decline. So what over the last 18 months, we've spent quite a lot of time restructuring the operations in order to try and optimize cash flow and ensure that we protect our balance sheet. We've actually reduced the workforce in South Africa now by about 12,000 people, so it's been substantial. But our gold operations and our SAPGM operations are now stable and cash flow positive. We are undertaking restructuring at Stillwater, as I said, at the US PGM operations. We'll be closing or putting the Stillwater West mine on care and maintenance, and that should stem a lot of the losses that we have been experiencing at those operations. We should get a benefit from the recent Section 45X tax credits that are part of the IRA. We estimate about $140 million from 2023 and about $100 million for 2024, which will obviously provide quite a lot of relief to those US PGM operations as well. So I think we're in a fairly solid position now operationally.
So that's just before we move on there, that $140 million in cost saving from the IRA, can that change? Can Trump row back on that, or is that done?
Obviously, they can change the legislation, but again, we've been lobbying for that. We've had a lot of support, not only from Democrats, authorities that we've been engaging with, but also from the Republican side. And as I said, I mean the US PGM operations, which are the beneficiary of that legislation, and was only reintroduced recently, and I think partly because of the lobbying that we've been doing and the engagement we've been having. So we believe that there is support, ongoing support for that legislation in order to protect the local supply of those metals. Yeah.
So if we have a quick look at the balance sheet, James, I think in your last results, there's around about 800 million of cash and about the same number of debt. What does that look like in a year's time? And I guess you have to make some assumptions on Rhyolite Ridge and what's going on in Finland with the lithium asset.
Yeah, so since we were on about net debt to adjusted EBITDA of about 1.46 times as at June, so well below our normal covenants are around 2.5 times. But what we've been doing is, in addition to the restructuring of the operations and ensuring that we optimize the cash flow from those operations, we have also restructured the balance sheet or try to reinforce the balance sheet. So what we did was engage quite early with our bankers, and we've had upliftment of those covenants to 3.5 times till June 2025, and then 3 times till the end of 2025. So that provides quite a lot of relief. And then what we've been doing is also reinforcing the balance sheet by raising non-debt capital. So we did a $100 million gold prepay recently, which gives us the cash upfront, but still gives us some exposure to the gold price, the upside in the gold price. And we are busy, as we said at our results, concluding or engaging on a streaming arrangement at the SAPGM operations as well, where we're looking at either streaming some of the more minor metals, gold, chrome, etc., to raise about $500 to $600 million.
Is that so you can spend the money on the lithium or the...
So it's more so the lithium project at Killer Bear is fully funded. We raised $500 million of green financing, a green loan recently. So that's fully funded. It's more to just ensure that the balance sheet is sustainable through an extended period of low prices. But obviously, if we do see a turn in prices, as you mentioned, if we believe that the PGM prices have bottomed and that there is potential upside, we'll be in a strong position to obviously continue with our growth strategy.
Do you think palladium and platinum are higher in a year's time? What's your internal forecast?
Yeah, we believe they will be. I mean, if we look at the overall market, it's been difficult, but we're starting to see more positive signs coming through. I think, first of all, from a supply side, South African supply is coming off. We've obviously restructured some operations, but a lot of the capital which was being spent has not been spent anymore. In Russia, some of those expansions, South Cluster, etc., have been delayed or actually suspended. We've restructuring in the US, so taking 200,000 ounces out there. So we are starting to see primary supply coming off. Then on the recycling side, which I think most market commentators anticipated a recovery in recycling already, but it's actually been negative growth to flat over the last 2 to 3 years. And, we believe that's going to continue. We believe that structurally that it's going to take a while for that market to recover. And then on the demand side, obviously with the slowdown in battery electric vehicle growth recently, and preference for hybrids. So hybrid sales have increased at multiples more than BEV sales recently. That creates additional demand for PGMs. And then depending on the global economic position and how it goes from here, potentially higher sales of vehicles would also create that additional demand in a lower growth BEV environment.
Gotcha. James, can we talk about management? So Neil founded the company. He's been there for, I guess, over 10 years now. How long has he got left at the helm, and what might come next there?
So, it depends on the board, obviously. I mean, Neil is, the official retirement age was 65, and he is 65 this year. But he has been given an extension on his contract. So, Neil's a big part of the business, big part of the team, but it is a team. And a lot of the key or the C-suite and some of the executives have been part of this business since inception. And it is very much a team environment where the strategy is driven by the team process and the board, and with the support of the board. So, nothing's really going to change there. I'm not sure exactly when Neil will decide to call it a day, but we do have a very strong bench of people who can step in.
And you're sticking around, James?
Yeah, I'm there. I've still got a long way to go.
So maybe in concluding, if we look forward a year, what can we expect to drive the share price apart from metal prices in the next year?
Yeah, I think we've positioned ourselves well now. There was some concern in the market that, our debt and cash flow position was going to put us at a bit of risk. But we have been very proactively restructuring not only the operations, but the balance sheets. And I think we're in quite a strong position now. So we very geared to prices, PGMs and gold prices, which we're constructive on. And as I said, even though the lithium market is in oversupply at the moment, we are seeing closure of supply in China, in Australia, etc. And at these prices, there's no incentive for projects to be developed. And ultimately, you are still getting steady growth in demand from BEV sales, which will continue to increase. And we believe that there will be a deficit market from 2027. So we think we're well positioned. That's why we've continued to invest in projects like the Keliber project in order to be able to deliver into that deficit environment, because that's going to need higher prices to try and incentivize additional production to come on. And as you know, in the current mining environment, it's harder and harder to permit, develop projects, bring them into production. It's taking longer and longer. It's more complex. So we think we're well positioned for a recovery in all of those prices.
So in summary, James, you've made your bets in terms of metals and assets, and now we're going to see steady as she goes, going to deliver on the lithium projects in Nevada and in Finland. And you've screwed the costs down, so we'll see the business start to consolidate and hopefully generate some operating cash flow as it was a couple of years ago.
Yeah, so that's right. I mean, we've consolidated the business. We've positioned ourselves in ecosystems which we believe are going to be supportive for the products that we're producing. So Europe and North America for the battery metals and our PGM supply in North America. We've got a strong balance sheet, a healthy balance sheet. So we believe we are well positioned for any recovery.
Have there been any insider buying recently? Current $4 share price, down from 20 a couple of years ago?
So, I mean, the management have bought recently. I think our Charles Carter, who heads up the US region, bought recently. But, with the restructuring we've been doing, and particularly the balance sheet actions that we've been taking, we've been in restricted period for most of the year, so it doesn't provide much opportunity.
Gotcha. James, thank you for coming in. I wish you well with your rugby match on the weekend. I'm sure that will go well for the South African crew. And I'm a happy shareholder. I like what I heard today. Thank you.
Thank you.